Welcome to Breaking News to Trading Moves. Today we're looking at a major action in the capital markets from ITT Incorporated. Specifically, its decision to do a large public stock offering to help pay for a major acquisition. For you, our focus today is pretty straightforward. We're going to look at the headline and then trace the market's reaction. We'll identify the companies and the groups that are gaining from this and those that are losing ground because of this particular strategy.
Right, because how a company decides to fund a big deal, that decision is often what sends the clearest signals. We're charting the immediate impact here, looking not just at ITT, but also its peers and even adjacent markets that are affected by this kind of financing choice.
Okay, let's start with the basic facts just to get the scale of this. What did ITT actually do here?
So ITT Inc. priced an underwritten public offering of 7 million new shares.
7 million. And what was the price point on those?
The price was set at $167 per share. And there's also, an additional 1.05 million share greenshoe option for the underwriters.
So if you add all of that up, what are the net proceeds that ITT is expecting to bring in?
You're looking at expected net proceeds of approximately $1.14 billion.
Wow. Okay, so what is the explicit goal of raising over $1 billion in new equity?
The funds are primarily intended to help finance the company's previously announced acquisition of the SPX FLOW business. And this choice, using equity to fund a large industrial acquisition, that's what really sets up the chain reaction for all these different market participants.
Okay, that sets the stage perfectly. So let's transition to the positive side of the ledger. Who actually benefits from this?
We can start with the most direct group. Category 1 is industrial flow and process equipment.
So the announcement itself seems to underscore robust demand in that market for things like pumps, valves, that kind of technology.
Exactly. A larger ITT, once it's combined with SPX FLOW, is seen as improving market sentiment for that whole space.
And the sentiment boost, it extends beyond just ITT.
Oh, absolutely.
So which other companies would benefit here?
Well, you've got ITT Inc. itself, ticker ITT, and then a major peer like Emerson Electric, which is ticker EMR.
Right. So moving on from there, what's the next category of winners?
That would be the automation and motion control suppliers.
Okay. And why is that? How do they benefit?
Well, when industrial assets get larger and more complex, which they do after a big acquisition like this, they typically increase their spending on automation, on sensing technology, motion control, all to chase efficiency improvements.
So they're looking to streamline the newly combined operations. Which specific companies gain from this need for efficiency tech?
We're seeing a positive reaction for Rockwell Automation, ticker ROK, and also Parker Hannifin, that's ticker PH.
Makes sense. Okay, and what's the third group of winners?
This one's a bit more behind the scenes. It's the investment banks and capital markets players.
Ah, the deal makers.
That's it. An equity raise of over $1 billion, especially when it's tied to a major industrial deal, generates a lot of fees for the banks. You're talking about fees for their equity capital markets, or ECM divisions, and their mergers and acquisitions M and A teams.
And I imagine this level of activity can encourage other companies to do similar deals.
It absolutely can. This fee generation directly benefits banks like Goldman Sachs Group, ticker GS, and UBS Group, UBS.
Okay, so that covers the upside. Now for the other side of the equation, where does the market see immediate pressure from this kind of financing structure?
The first and most obvious group are the existing IPT shareholders and, you could say, other equity-funded acquirers.
Right, because when you issue new shares, that causes dilution for the current shareholders.
It does, and the stock often slides right after the announcement of an offering like this. Traders will frequently sell the stock first and then wait for actual proof that the acquisition is going to drive future earnings growth.
So the pressure is really on ITT itself.
It is. So that's ITT Inc., ticker ITT. And it also casts a bit of a shadow on other companies that might be pursuing equity-funded deals, like Ingersoll Rand, ticker IR.
Okay, so after the shareholders, who's next?
Category 2 would be the mid-cap flow and water technology peers.
And why is that? Is it just a tougher competitive landscape?
Essentially, yes. The new, larger, and well-financed ITT and SPX FLOW combination becomes a much tougher competitor almost overnight. In big industrial and infrastructure projects, that increased competitive capability can really pressure the pricing and margins of their smaller mid-cap rivals.
And who are some of those peers that would feel that impact?
You'd be looking at companies like Xylem, ticker XYL, and also A.O. Smith, which is ticker AOS.
Got it. And for the last category of losers?
We'd look at highly leveraged industrial conglomerates.
So how does ITT's move affect them?
Well, ITT's choice to use equity instead of taking on a lot of new debt sends a clear signal to the capital markets. Investors might start pushing other, more indebted industrial firms to raise equity instead of just relying on debt for their own big acquisitions.
So that investor scrutiny can start to weigh on the share prices of those more leveraged firms.
That's the idea. So this could affect companies that are carrying higher debt loads, including, say, General Electric, ticker GE, and 3M Company, ticker MMM.
So the core tension here is pretty clear.
It is. The market rewards the potential strategic growth of the combined company, but it penalizes those who bear the immediate cost of the dilution, or those who are now exposed to more competitive or strategic pressure because of this move.
It's a good reminder that how you finance an acquisition equity versus debt can have consequences that are just as broad as the acquisition itself. It influences sectors far beyond the companies that are directly involved in the deal.
All right, so a final thought for you to consider here. How might the success or failure of the integration of SPX FLOW dictate whether ITT's choice of equity financing becomes the go-to strategy for industrials in the next cycle, or if it just becomes a cautionary tale?
Disclaimer. Please note that this is not financial advice or recommendation to buy or sell any of the stocks mentioned. This information is purely the opinion of the author and is derived solely from the provided market information. Thank you for joining us on Breaking News to Trading Moves.